Hello everyone, my name is Moji. You're watching a Bitcoin Bubble News channel. If you look at this chart, you can see that whenever it goes above 0.5, we're already in a recession. The market is a little scared today because of that. MicroStrategy wants to sell a class of shares to get up to $2 billion that will be used to buy more Bitcoin and for other business needs. The Virginia-based company did not say when the sales would happen or how much of the money would be used to buy Bitcoin in a legal filing with the U.S. Securities and Exchange Commission. MicroStrategy raised the amount of money it was offering to buy more Bitcoin from $500 million in unsecured senior convertible notes in June to $700 million the next day. MicroStrategy, which was started and is run by Michael Saylor, already has more Bitcoin than any other public company in the world. It holds 226,500 Bitcoins worth more than $14 billion, though this could change depending on the market. The business says it is the first Bitcoin development company in the world, and its goal is to help the Bitcoin network grow through financial market activities, lobbying, and new technology. Bloomberg says that MicroStrategy's software business had a net loss of $12.6 million, or $1,574 per share, in the second quarter. This was reported last week. This is the second quarter in a row that the company has lost money. It was also reported by Bloomberg that MicroStrategy buys Bitcoin with money from its software business, and that experts are keeping a close eye on its cash flow. Okay, let's be clear, BTC has been the most risky thing in the world for a long time. Risk asset growth has been good for it. As more money has flowed into risky products, it has also gone into Bitcoin. Bitcoin is a very volatile asset that has done well by riding the instability to the upside. But keep in mind that Bitcoin has had a huge run over the last year, especially this year, thanks to the money that ETFs have brought in. That's good news for Bitcoin, and I think it will encourage more big investors to learn more about the assets, figure out why Bitcoin is different, and really understand it before adding it to their portfolios in a separate way. In this case, that's the real development we want. We're still not there. It's taking a long time for institutions to get used to this product. But if you look at this picture, you can see that over the last 9 to 11 months, the orange line shows where Bitcoin has been below its all-time high, and the black line shows where the Nasdaq is. They're right on top of each other. Bitcoin has been going down in value over the last few weeks, but that's mostly because of the election. You had a nice rise and tried to break through the all-time highs once more. It looked like Trump would be nice. A month ago, it looked like he would win by a huge margin. It looked like Bitcoin jumped back up just as he was about to get sacked. Now that everything is over, Bitcoin has moved around a bit, but look at where it's come from. The Nasdaq is going down from its all-time high right on top of it. This is very interesting. From this picture, you can see that Bitcoin has had a great run since those ETFs were made. It hit that all-time high, but it has been leveling off since then. This has been good for me. It's been really good for you. Michelle, do you remember the last time Bitcoin really showed itself to be a risk-off asset? It was when people's money was in danger. Back in the Silicon Valley Bank crash, that was the case. During that disaster, and when it looked like that was going out of business, which it did, Bitcoin recovered. During that time, Bitcoin did well. People woke up and said, "Oh my gosh, my money is not safe in the bank." The Federal Reserve came in and said, "Yes, it's safe, do not worry." You don't need to worry about your money being safe because we're going to come up with these acronyms for these bailout schemes. Bitcoin is back where it was, and no one has had to learn about it yet. We want the market to be shook up in a way that makes Bitcoin the safest product. Even though it's not quite there yet, I think that as more companies learn about it and put money into it, it will grow to the point where it is a true store of value with lower volatility. That makes sense. Right now, it's only worth $1 trillion. There are $900 trillion worth of assets that can be invested around the world. Bitcoin is a very small part of that. It's about 0.15%. Bitcoin will be worth more than $400,000 if you can get just 1% of those assets that can be invested. Actually, that's the point. Once it's there and there are $9 trillion or $10 trillion in that asset, buyers can feel safe and sure that it will hold its value over time. That's when, Michelle, we start seeing transfers from other asset classes, not just the asset class itself, but also things like long-term treasuries, where real rates for long-term bonds are negative. Investors will eventually wake up and ask, why am I putting my money in a 20 or 30-year treasury when inflation is going to be high for the next couple of decades, or at least the next decade? This is because of our huge deficits in debt. We have to keep real rates low. That's just how things are. The money needs to be devalued so that we can keep up. Because of inflation, nominal GDP needs to rise. This means that your bonds are worth less on their yield because of inflation, giving you a negative real yield. When investors figure out that those bond yields